Thank you for staying with us on Niaga AWANI, and we're going to go straight on English news. Lower gas costs slowed US inflation for a second straight month in August, but most other prices across the economy kept rising, evidence that inflation remains a heavy burden for American households. Consumer prices rose 8.3% from a year earlier and 0.1% from July. But the jump in core prices, which exclude volatile food and energy costs, was especially worrisome. It outpaced expectations and ignited fear that the Federal Reserve will boost interest rates more aggressively and raise the risk of a recession. President Joe Biden gathered a crowd of thousands at the White House Tuesday to celebrate last month's passage of the Inflation Reduction Act, even as a new government report showed how hard it could be to bring surging prices down near pre-pandemic levels. Despite its name, the law's impact on inflation is expected to be modest at best. Tuesday's economic report inflation at 8.3% year-to-year, though just 0.1% from July to August, was a harsh reminder of how difficult it might be to hit the Federal Reserve's inflation target of 2% a year. Even as gasoline prices have declined since June, the cost of housing and food remain especially high in a way that suggests further Fed rate hikes and more economic pain to bring down prices. US stock index fell sharply on the inflation report, with the benchmark S&P 500 down more than 4.3% on Tuesday. The dollar index rallied on Tuesday and the S&P 500 tumbled 4%, while Treasury yields surged after data showed US consumer prices rising faster than expected in August, prompting bets for more aggressive Federal Reserve rate hikes. Wall Street's equity indexes saw their deepest one-day percentage declines since June 2020. This was a sharp reversal after the major stock indexes had rallied on Monday and in the previous week, as investors had bet Tuesday's data would show an easing in inflation and provide a path for the Fed to ease its policy tightening. The Dow Jones Industrial Average fell 1,276 and 37.37 or 3.94%, while the S&P 500 declined 177.72 points or 4.32%, and the Nasdaq Composite tumbled 632.84 points or 5.16%. MSCI's gauge of stocks across the globe shed 3.39% in its biggest daily decline since June 13th, after the index had risen in the previous 4 sessions. In currencies, the dollar index rose 1.534% in its biggest one-day percentage gain since March 19th, 2020, with the euro down 1.46% to $0.9971 on Tuesday. Oil prices ended nearly 1% lower on Tuesday, reversing earlier gains as US consumer prices unexpectedly rose in August, giving cover for the US Federal Reserve to deliver another hefty interest rate increase next week. Brent crude for November delivery settled 83 cents lower at $93.17 a barrel, with a 0.9% loss after trading between $95.53 and $91.05. October crude futures closed down 47 cents or 0.5% at $87.31 after touching a high of $89.31 and low of $85.06. The Consumer Price Index gained 0.1% last month after Beijing unchanged in July, the US Labor Department said. Economists polled by Reuters had forecast a 0.1% fall. Fed officials are set to meet next Tuesday and Wednesday, with inflation way above the US Central Bank's 2% target. Oil is generally priced in US dollars, so a stronger greenback makes the commodity more expensive to holders of other currencies. That is all for today's Niaga AWANI. Be sure to tune in to us every weekday, Monday to Friday, 9 a.m. And thank you so much for watching.